Good afternoon, traders. It is Friday, January 31st, 2014. The U.S. stock market is closed. What happened today was unfortunately what I feared was going to happen when I made the video yesterday. The overall market did reverse very strongly, particularly on the open, and as a result we were caught with 23 positions and it got pretty bloody. We ended up losing or closing out over $12,000 in losing trades, and we're carrying negative $712 over the weekend, which is nothing to be concerned about, but the $12,000 plus is something to be concerned about. I'm getting email from a few people saying, call the undertaker for Bob Moran. Bob Moran's system is dead. It doesn't work anymore. This is a bear market. Let's all throw in the towel. And I got to smile a little. I've been doing this for a long time, over 2 decades, and I have seen this happen over and over and over again. And I'm here talking to you because I don't pay too much attention to it. We've had a rough week, no question about it, but I finished out the spreadsheet for January during the market or right after the market, and we made $55,000 in January. And I went back and looked at 2013 again for all 12 months, and $55,000 is about average for what we did in 2013. And keep in mind, 2013 we made we made 120%. So we're right on course for doubling our money in 2014, and this is nothing. And I know if you're trading it for real money and you're new at this, it doesn't seem like nothing. I know that feeling, but believe me, it's nothing. And when you trade a mechanical system, this one or any other, but particularly this one, I can talk about this one because this is what I've been doing for a couple decades. I will tell you that I have a rule. It's called the rule of the screw, and the rule of the screw states that the majority of market players have got to lose, and the market will move in such a way to make the majority lose. And when you have a situation like we've had at the beginning of January, where we're making money hand over fist. I mean, people are accusing me of fraudulently posting trades on the internet because that's how good we are doing. And yet, when we're doing that well, what happens is too many people get caught up in the kind of trading patterns that we trade. And pretty soon, the market is thinking, the majority is trading this way and they're making money. We can't have that. And so the markets will turn and start acting in a negative way toward that style of trading. That's what's happened. And so we had, 10 days been pretty crappy, and it's pulled down our equity some. But we still have a lot more profits at the beginning of the month than we did at the end of the month. I looked at the statistics, and we have days where we're making more than $20,000, and contrast that with a day like today when we lost 12. I mean, we make more money when the market goes up than when it goes down. This market has really sold off the last few days, and we have not been damaged as much as you may think we have. Anyway, that's my sermon for the day. Hey, let's take a look at the charts. Okay, here we have the Dow, and you can see this descent. I mean, this was an all-time intraday high for the Dow, and it's just gone down, 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 down. But if you are sharp and looking at charts the way I do, this thing's starting to flatten out. And it will flatten out. And this is not going to keep going lower and lower and lower. I don't believe this. I think this, and this is not a bear market, people. I'm telling you, We're just, bear markets signal the start of a recession. We're just coming out of this recession. This is no bear market. This is just a correction. This is just shaking people out. So don't get shaken out. Stick with this. We're going to make money. Okay? Anyway, the Dow plunged really hard on the open. And most of the markets that we trade follow that pattern. And I'll show you that in a second. It did come back and then it sold off from there. I don't know what's going to happen on Monday. The market could go lower, but the way it's going, the pattern that it's set up, I think it will go higher on Monday. But it is eventually going to go up and take out those highs. That I can almost promise you. I'll show you a couple of the trades. This was a good trade we had in ATHN Athena, and we had bought this yesterday and it made this big spike. It pulled back. This morning it did something. This was the pattern of practically every market we were in, is it gapped down on the open, it looked bad, and then it recovered. And you can see here that we got out of Athena almost at the very top of the market. Really nice trade, about $2,000 that was worth. So that was a trade that went very well for us. And in fact, if we had not gotten stopped out of a bunch of trades down here like we did in some of the other markets, we would have done much better. But unfortunately, we do put stops in, and those stops got hit in a lot of cases. I'll show you one more here that actually also shows the same pattern. This is in Tesla Motors, a market I really like. We had bought this yesterday. It had gone up and up, and again, see, you get this big down spike on the open. I mean, we were at a loss with Tesla on the open, but then it did come back. We didn't get out at the tippy top high. We got out here before it started going down again, but we still made over $1,500 on Tesla. So it was a good trade. Hey people, it's tough being a trader. It's not easy being a trader, but we do make money. And if you can stick with this system and get through these kinds of bad days, the good days you're going to make a lot more money on the good days than you lose on the bad days. That's about all I have to say. This is Trader Bob signing off, and I will see you on Monday.